Good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global news flow first. The world markets are a happy place. European stocks gained after ECB's dovish hike. And of course, the euro slid to the lowest since March on the view that the ECB's done hiking. US stocks rallied after the US retail sales beat estimates. It led a bunch of global media to say that the Fed might be able to engineer a soft landing while keeping the rates higher. And in interesting changes, Subway has launched the first ever 3-inch sandwich in Pakistan to tackle inflation pressures. Could this be a sign of things to come? Could we see more such stuff from not just Subway, from other players across the world? Remains to be seen. Nevertheless, like I said, the markets did okay. US stocks were in the green. European stocks were in the green. US stocks were in the green, about a percent or close to a percent, so not bad. The other markets, and were also in the green. And the other indicators, the 10-year yield at 4.28, so sub 4.3, steady at those levels. Dollar index has inched up a little bit. Like I said, the euro slid to the lowest level versus the dollar. The volatility index in the US came off a little bit. The gift nifty, for whatever it's worth, for now, indicating a start which is in the green. Let's see, or flattish actually. Let's see if indeed that is what happens. In fact, what happened yesterday is also interesting. Yet another day of the large caps remaining stable, but the broader market shooting up. Nifty 50, 33 points, ending at 20103. The bank Nifty had increased by 0.2% to close at 46,000 odd. The Nifty mid cap 100 though, and the Nifty small cap 100 gained quite strongly, 1.17, 1.131%. And the PSU Bank Index was the top gainer, followed by Nifty Metal. Now that may have a bit of an issue today, but I'll come to that in a moment too. But just saying that commodities are getting bought into. Now, what's the trade setup therefore? Well, SMIDs are definitely higher, which is the small and mid cap indices, but the large caps are not a case for leverage shorts just as yet. Passive fund buying could help the bank Nifty today, courtesy HDFC Bank, but the impact is not easily discernible. Now, let's just take a moment here because of the FTSE buying or the Sensex rebalancing, so on and so forth, and multiple impacts likely in the second half of trade. Can we see some bit of an impact in the second half, or can people discount that and start buying that in the first half, particularly HDFC Bank, but some of the others? Can that help the bank Nifty and thereby the Nifty? Well, remains to be seen. Remember, it's the heaviest weightage on the indices. So, like I said, there'll potentially be an impact. What quantum of an impact will be seen remains to be seen. PSU banks are getting bought at every dip, so that's naturally a trade that people should watch out for, but also watch out for commodity stocks. Yesterday, for example, you saw what sugar did, right? A rise in sugar prices, sugar stocks went through the roof yesterday. Metals yet again got bought into. Now, today is a different kettle of fish because coking coal price is rising and contributes such a large portion to the overall production cost that could it impact the steel stocks remains to be seen. But as news reports have it, and I don't have individual confirmation, but apparent list prices have been increased by some of the steel companies yet again. So, anybody's guess as to the margin impact. I think a metal company itself can tell us the best. But for now, the point I'm trying to make is that commodity stocks, whenever there is a bit of a rise, are seeing some bit of an uptick, and you've got to be mindful about that. But broader markets are expensive. Chris Wood, in his weekly column, also writes about uh, Indian mid caps as well. He's saying that there is clearly room for a correction in the mid cap area, most particularly as a continuing rise in the oil price has the potential to create some renewed inflationary noise in India, just as it does in the developed world. Still, by historical standards, valuations for the big cap stocks are not particularly extended. Now, this um, this has two effects. One, we know that a lot of mid caps and small caps are actually rising not because of global money, to which reads Chris Wood's notes and acts upon it even more strongly than the Indian money managers. I would presume Indian money managers, because they are entrenched, would essentially look at their own bottom-up research in a meaningful way and form their opinion on the mid caps and the small caps. And there will not be blanket avoidance because, as we said in the mutual fund show this week as well, the quantum of money coming into mid caps and small cap funds is so large, and that money has only one place to go by definition and by the rule. into the mid caps and small caps. So you see that activity being very, very heightened. And that's why these stocks continue to rise and shine. Even in yesterday's session, as I said, about a percent and a half for the mid caps and the small caps. Sometime on Monday rather, we'll do the study of what the mid caps and the small cap stocks have done on trade setup itself, have done relative to large caps in the last 3 months. I did some bit of it about 2 weeks ago, but what we'll do is try and do an extended uh, assimilation of what some of the individual names also have done. So watch out. We will try and do that for sure. Okay, an IPO opens today. Yatra Online will raise about 775 crores, spread over 5 days because there are holidays in between. Price band at 135 to 142 has raised about 348 crores from 33 anchor investors. It's coming at a good time when the season seems to be very, very strong for tourism, and we hitting the festive season, right? Ganpati ji coming next week. So in some sense, it's an official start of the festive season, if you will, and therefore very keenly watching out for what the subscription to Yatra looks like as well. Stocks to watch. It's not a very long laundry list, but I'll put out some at least. So first, the set of liquid movers and which did well, and see commodities out here as well. NMDC, Balrampur Chini did really well in trade yesterday. Interestingly, there was some move in UPL. I believe Antique had a buy note yesterday. That stock moved. United Spirits has moved as well. And there are a lot of very smart investors who talk about how United Spirits, by virtue of premiumization and margin management, could actually do really well. So watch out for this one too. And Alchem Labs, while the news was broken by various media outlets yesterday, I think the company's official statement came in post-market hours, so I'm bringing it today. It said that income tax department conducting survey at some offices. Maybe the stock reacts. Let's wait and watch. Gufic Bio, I don't know what kind of impact would it be, but I'm just bringing it out. It's granted patent for invention of a term for 20 years effective from April 19, 2021. I have zero idea about what the patent is, what kind of product it is, but it's a news that I thought I should bring it out. Excuse me for not having a chance to study this, but in case this stock reacts, you know why. If you want, you can just do some basic research on this as well. But it's a news, so I thought I should bring it out. Now, Patel Engineering, I don't know if it reacts or not because the size of Patel's share in this project they've bagged is just about 100 crores, but the JV has been declared L1 for an irrigation project, and we'll consistently see some of these infra stocks bagging orders, and which is a good sign, by the way. And Patel, remember, as a stock has gained quite a bit as well, despite the last few days volatility. Overall, over the last 3 months, Patel Engineering has had a good move. Let's wait and watch if there is more in store. Indigo is interesting. This is no news, but I thought I should bring it that PGCA is seeking urgent intervention in Indigo engine woes. Now, the note from MK is interesting here. One, they are saying that the Pratt & Whitney engine issues have aggravated with parent company RTX Corporation expecting over 3,000 engine recalls for inspection versus an earlier estimate of over 1,200 engines. Now, MK estimates that incremental impact on Indigo under the worst case scenario to be 20-25 more aircrafts on ground at a time on an average for the next 3-4 years from 40, as the belief was 40 at the end of June 23. Now, why this could also be happening? So, of course, the damage will not be as large as was earlier envisaged, excuse me. And MK's note goes on to say that as per media reports, Indigo plans to add 20 A320neos on damp lease. Now, the blended impact of the dry and the damp lease would on net earnings is about 6 to 7% according to their assessment. They believe Indigo remains the best place amongst peers to tackle the current challenges of engine issues and rising fuel prices. The expected yield recovery, according to them, because of a peak or a busy travel season, should offset cost pressures. Well, let's see if that happens, but watch out for Indigo in case it reacts because of the news. But the analysis of somebody who tracks it closely seems to suggest it's not a very large impact. So bear that in mind. Then Tata Motors, Nomura's note is interesting. They say the Nexon, their target price remains 786 with a buy rating. They say Nexon entry variant pricing offers much higher value along with a major technology upgrade that is coming. They believe Nexon has the potential to become the highest selling SUV in the entire SUV category including the large SUVs, not just the compact SUVs. Right now, Nexon is a leader in the compact SUVs. They believe Nexon has the potential to become the highest across all categories. That could be big for Tata Motors. And they say that the company is also planning to start building exclusive retail showroom for EVs, which could actually help the sales. Well, let's wait and watch if Tata Motors continues to remain a favorite on this auto space. It's a stock that's done well, you have to admit. Let's see if there is more in stock. Then Titagar Rail Systems, and you saw the interview yesterday. By the way, viewers, if you haven't seen the Titagar interview, I urge you to try and go and see it, because not only it gives you a sense of how the management is thinking, but it also gives you a sense of how, we've done it from inside a locomotive factory. And it was, I mean, I had expected a locomotive engine factory to be old world, not necessarily spick and span. It was anything but that. Hats were compulsory. So I was pretty impressed with the facility, must say. But so therefore, I urge you to watch that interview, of course, because it's a. I mean, forget the question answer, which is also important, but just the look and feel that you get from the factory is also important. And I think you get that from the shop floor that we've done that. But that this is a conversation that I'm talking about. Do try and catch this. Now, this is one, but so it's just interesting that today HSBC has come out with a note on Titagar Rail Systems. They've retained the buy rating. They've raised the target price to 900 from 750 earlier. And they say that the target price hike is on increased earnings estimates and valuation rollover. Robust core industries volume trends underpinning very strong demand for railway wagons from the private sector. The wagon orders from the private sector come with superior profitability as well as working capital terms. And in fact, they believe that even Q2 EBITDA margins could surprise given the high private sector contribution in Q2. Now, I must admit, I did not ask any questions about Q2 immediacy to Umesh Chaudhary. But be that as it may, I thought it was still a conversation that gives you good insight, and HSBC talks about the near term as well. Now, remember, railway stocks have come off the boil, and maybe rightly so, because these stocks are trading at very high valuations. But even on these valuations, HSBC, for example, and they seem to be tracking this well, because I've read their initiating coverage report on Titagar as well. They believe on these valuations, they want to roll forward targets and hike the target price higher. So very interesting. In case the stock reacts, you know why. It's not because of my interview. I don't take credit for it at all. I'm saying it will react if it does because of the HSBC note. So do watch out for that. What else am I missing? Yeah, there's a note from, I think, Nomura, which speaks about how the East India cement price hikes have been absorbed well by users. So therefore, watch out for the East India cement companies, Nuvoco Vistas, Dalmia, Star Cement, etc. So those are pockets to watch out for. Tech Mahindra is a new organizational structure, so that should be kept in mind. Yeah, Spark has a TCS upgrade, so maybe that stock reacts a little bit. So that's to be watched out for as well. And yeah, there's a newspaper report which says Dixon is in talks with US-China companies for laptop manufacturing. Well, we know that from November, I think laptop imports into India will attract a duty. So therefore, domestic manufacturers could well be in fray, which is why I think ITI has risen like nobody's business from 125 or 135 to 200, if I'm not wrong, is the price rise in ITI in 5 days, because they have manufactured domestic laptops with Intel processors in partnership with Intel. Now, Dixon is also trying to do that. So watch out. This space could be very, very interesting, especially after November as imports become more expensive or impossible, as the case may be. Nevertheless, that's the long and short of it. It's a busy day at BQ Prime. Of course, we'll have talking point, obviously. Ajay Srivastava of Dimensions will be joining in to talk about his thoughts on the markets. He was not very constructive the last time, and the markets have risen. So it'll be interesting to play the devil's advocate and pick his brains about what is his stance now. So that's one conversation. But it's a busy day because it's also the banking summit. And starting 11 a.m. today on BQ Prime, various conversations. We call it Banking Unlimited, and it'll be very interesting to see what some of these bankers have to say with regards to operations, with regards to what's the path to profitability. And it's not just, of course, banking; it is also NBFCs. So it is very interesting. Very quickly before we wrap up, there's a query: is it time to be cautious on markets? Well, and is it time to buy railway stocks? Okay, two queries that have come in. The first one from Kanishka Dibber: too many IPOs, too many new people jumping in, thinking money making in the market is easy. Kanishk, it's a very valid question, very valid point as well. Usually, I've seen market peaks happen when everybody is constructive. I believe that a lot of people are skeptical currently. So I don't know if it's a peak, but is it time to be cautious on the market? Most certainly, especially at the broader end of the spectrum. But I urge you, Kanish, I think Chris would sums it up very well, that at the broader end of the spectrum, there is a bit of a froth. There's a bit of room for correction in mid cap area. Now, your mid caps may not be expensive and therefore they may not correct, but a lot of other mid caps may. And therefore, you've got to guard yourself against that. But in the large cap space, think about it: IT, banking, energy. I don't think the valuations are too demanding. So a routine correction, 5%, 7%, can that happen? Yes. Can it make you feel that the mid caps have corrected 15%? Most certainly. So please be careful about which mid cap pocket are you a part of, Tanishq. That's the most important thing. And another query about whether it's time to buy railway stocks, very difficult answer, really. In fact, if anything, Surya, um, okay, yes. So is India turning out to be a manufacturing hub? I urge you, Surya, to try and see that interview that I've done with Umesh Chaudhary. In various ways, he talks about how India is likely to become a manufacturing hub. We've seen companies, both consulting and manufacturing, go out across the world and try and do some, uh, how do I say, contracts with global companies, global countries for manufacturing railways out there, right? You see the G20 outcome as well. It's a long drawn process, but I'm just saying. So, yes, it is becoming that, but some of it is being captured in the valuations for sure. Are railway companies looking very strong? Yes, they are. Can they correct a bit? That's the only key thing. But try. I mean, I think uh, we'll try and storify the HSBC note as well. You might get some cues from there too. Try and hear the interview, and you'll get some cues from there too. But keep in mind valuations that they are looking a touch stretched in select cases. Well, we're about time on trade setup. Thanks so much for tuning in, and have a great weekend.